Okay, let's dive into this. Here is our syllabus for today. 1. The Cash Book Foundation. 2. Steps for balancing entries. 3. Three-column cash book practice. 4. The Petty Cash Impress System. And 5. We'll wrap it up with a final revision review. All right, starting with Part 1, the Cash Book Foundation, and understanding its dual nature. Now you might see this classic trick question pop up on an exam. Is a cash book a subsidiary book or is it a principal book? Well, it turns out it's uniquely both. It's a subsidiary book because your cash transactions are recorded straight away, totally bypassing the general journal, but it's also a principal book because it acts as the actual ledger account. Those balances go directly to your trial balance. And a cash book actually scales up depending on a business's needs. You start with the simple cash book that just has one amount column for cash. Then you level up to the two-column cash book, which adds either a discount or bank column. And finally, you reach the boss level, the three-column cash book. That one handles cash, bank, and discount columns all at the exact same time. Moving right along to Part 2, Steps for Balancing Entries, we're going to give you a foolproof method for this. Balancing is honestly where most points get lost, so think of this as your chronological checklist. Step 1, always total your debit side, your receipts, first. Step 2, you subtract the total of your credit side, your payments, to find the difference. Step 3, you write that difference on the credit side as by balance C/D, which stands for carried down, making both columns equal. And finally, Step 4, you bring that exact same amount down on the debit side, below the totals, as to balance B/D, or brought down. That's how you start your new period with cash in hand. So the crucial point here is a very simple rule of life. You literally cannot spend cash you don't have. Because of that, the debit side, your receipts, absolutely must be greater than or equal to the payment side. If you're ever calculating a negative cash balance, stop right there, because you've definitely made a math error somewhere. Okay, Part 3, three-column cash book practice. Let's roll up our sleeves and tackle Chandrika's business. Here are the key transactions we need to handle. Chandrika starts off with $20,000 in cash. Then she deposits $19,000 of that into the bank. Notice that this right here is a contra entry. That just means the money is moving between our own pockets, straight from the cash till into the bank account. We also have some payments and receipts involving checks and discounts. Let's see how this actually looks when we write it out. And this brilliantly illustrates exactly how it comes together. Pay close attention to January 3rd. We credit the cash column $19,000 because cash is leaving and instantly debit the bank column $19,000 because the bank account is growing. That little C you see, that signals the contra entry. And as for balancing, $20,000 in cash minus the $19,000 deposit leaves us with exactly $1,000 carried down. Easy, right? Now, pause for a second because I need to highlight a major caveat with this three-column format. The discount columns are merely memorandum columns. They're just there to track total discounts. You total them at the bottom, yes, but you absolutely never balance them against each other like you do with the cash columns. Don't fall for that trap on the exam. Let's move on to Part 4, the Petty Cash Impress System, which is all about managing small daily expenses. Imagine having to write a formal bank check just to buy a 5-rupee pen. It's ridiculous, right? To handle this, businesses use the Impress system. Instead of writing checks for tiny amounts, a junior cashier is given a fixed float of cash for the week. At the end of the week, they hand over all their receipts and they get reimbursed the exact amount they spent. Let's look at a quick example to make this concrete. We're going to set our starting impressed amount to a flat 100 rupees. This is the fixed, definite sum our petty cashier starts the week with. Now, over the course of the week, that 100-rupee pie gets eaten up by assorted sundries. 14 goes to transport, 18 to stationery, 21 to repairs, and 5 to refreshments. In total, they spent exactly 58 rupees. So, to start the new week, the main cashier doesn't just hand them another 100-rupee note. No, they give them exactly what they spent, 58 rupees. That tops the remaining 42 rupees back up, magically hitting our 100-rupee impress limit. It's just a brilliant, simple system for controlling small payments. And that brings us to Part 5, our final revision review. Time to quickly check your knowledge. Let's rapid fire this to lock it in. 1. The cash book acts as both a subsidiary journal and a principal ledger account.
2. You can't spend what you don't have, so receipts are always greater than or equal to payments. 3. Contra entries, marked with a C, mean cash moves to the bank or vice versa, and they have to appear on both sides of the book. 4. The golden rule of discounts: total them, never balance them. And 5. The impress system reimburses exact expenses to perfectly restore the original petty cash floats.
Let's leave you with one final provocative thought to test everything we've covered. If a company's petty cash impressed amount is 500 rupees and exactly 365 rupees and 10 paise is spent, how much is recorded as the reimbursement to start the new week? Well, based on the rule we just learned, it's exactly what was spent: 365 rupees and 10 paise. Keep these rules in mind, and you are going to absolutely crush your exam. Thanks for joining this explainer on mastering the cash book.